Welcome back to the Everything Property podcast. Now, if there's one thing you need to inform you with your property strategy and next purchase, it's going to be property data. CoreLogic is undisputedly the leading powerhouse for property data and analytics in all of Australia. They're a household name through news, data packs, RP data, articles, and they help inform the content that we do at Everything Property, as well as the research almost all real estate professionals do in their career. Who better to get on the podcast than none other than the head of residential research, Eliza Owen. Eliza has spent over a decade researching the Australian property market. If you look further back than this, you'll find academic merit prizes, first class honours, TEDx talks, high achievers clubs, and more honours and awards than interest rate rises in the last 18 months. I could not think of a better person for today's episode, but without further ado, Eliza Owen, welcome to the Everything Property podcast. How are you?
I'm so good after that introduction, David. I feel like my head has swelled to twice its size. That's the nicest podcast introduction ever. Thank you so much.
There you go. Look, we'll start on a good note, and it usually just drops away from here. The reason that we've got you on is obviously to talk all things data. A lot. Anyone that follows CoreLogic or sees any of their content knows that you are plastered all over it. You're writing articles. You're giving us the updates, especially after interest rates and all that kind of stuff. So I thought we'd have a masterclass today around property data, and we talk in depth about that resi property space. But what I want to know first is, it goes back to your university days and your study, but why economics and why data? Tell me.
Economics is a really great way to help explain a chaotic world. It's all about putting theories and guidelines to human behavior in response to different incentives, and it helps explain how we allocate limited resources for unlimited wants. And housing is a really interesting way of exploring economic concepts as well, because it's all about how we allocate ourselves as a society spatially, how much we're willing to pay for property, and how demand for property responds to things like migration, taxes, various government policies, living preferences. So economics as a foundational study provides a good guide for understanding the property market. And there's lots of other studies. I think you have architecture and development in your background, psychology, like all sorts of other studies that come into play as well. But economics for me was just like a really nice lead into that.
Because originally Eliza Owen was an English and drama kid, right?
Yes, I was.
We go back further. But now you're into economics, economy, market research. You used to work back at CoreLogic and stuff when it was the Residex days.
Yes.
Is that right?
You have done some deep research.
I'm not going to have you on and not know anything about you. But what I think was really cool, if you can talk to a little bit about that a bit with your studies, but what was your job back then and what did you have to do?
Yes. So I had moved out when I started studying at uni, and I got a part-time job at this company called Residex, which was a relatively small Australian property data company. My job was calling up real estate agents and collecting their weekly sales information. And this is still done to this day.
Really?
Yeah, because what happens is we have thousands of different data sources, and some of the sources where we get sales information can be quite lagged. Official Valuer General records, for example, that are gold standard in terms of understanding sales information, but they come through infrequently, they come through quite lagged. So what a lot of property data firms will do to ensure they get really recent information, like if your neighbor's house down the road sells, we want to know about it within a few days. So that's why we're calling up real estate agents, building those relationships and getting the sales information. And it's still done on, I mean, there's more technology to it now, but it's still done on the weekends as well, where you have all the auction results rolling in and the reporting on the auctions on the Monday after the weekend. So that was my job, was calling around and getting that sales information.
Well, you were always going to like bring it up because I thought it was really funny that you had to do that. And I was like, oh, these days, I'm sure it's just online. But you're telling me that people still do that?
It's a combination now. Okay. So you get more of the technology aspect, but you still get people on the phone as well. Okay.
Luckily, you've moved on and upwards since then. You're not on the phone. But okay, well, look, let's dive into Australian residential property data. And it's almost underpinned, or when a lot of our audience or the people that we get on, we talk about it. We talk about two things essentially: supply and demand. So talk to me a little bit about supply and demand metrics and how CoreLogic and you guys are seeing, the research and how you're splitting it up and how sort of both are balanced in the work that you guys do.
So there's probably a few different ways to think about supply and demand. One of those is in a very market sense, as in the supply of properties that are available to purchase versus the demand of how many people are ready and willing to purchase property. And that goes a long way in explaining price movements across markets as well. So nationally, for example, you've got a situation where a lot of the economics are sitting against home value increases. You've got weak consumer sentiment, slowing economic conditions, high interest rates, and yet home values have risen for the past 17 months consecutively. And the reason we would explain those increases is that you've just got more purchasing demand or sales volumes than there is supply, the amount of people who are putting up their property for sale. So in the June quarter, it was about 125,000 transactions across Australia, but about 123,000 new properties listed for sale in that same period. And as long as you've got more transactions than flow of new properties coming to market, your prices are going to be increasing. On the other end of the spectrum, there are softer markets like Melbourne, where in the quarter you've seen about 21,000 transactions occurring across that market, which is still relatively high across the capital cities, but you saw over 25,000 new properties listed for sale in that same period. Wow. So more people looking to sell than looking to buy. But in other ways, you could still characterize Melbourne as an undersupplied property market when you think about things like the rentals that are available, social and affordable housing, the number of people on social housing wait lists, the number of homeless who are sleeping rough or on wait lists for social housing. So there are different ways that you can define supply and demand, and I think it's helpful to make that distinction because a lot of people will say, oh, if Melbourne is so undersupplied, why are values falling? It's because we're talking about a very different kind of supply and demand when we talk about prices.
Well, you touched on it a little bit then, but one thing that I always find is interesting is the relationship between interest rates and property price growth. People always think interest rates rising means properties falling. When interest rates fall, then property prices grow. Now, you've talked about this recently, but what is your breakdown, or what are your findings between that relationship of house price growth, interest rates?
So if you look at it from a data perspective, even just like a basic correlation measure between the movement of the underlying cash rate, so the RBA's interest rate that they set, and the change in home values over time, there is what we would call an inverse relationship, a negative correlation, and it basically means that if interest rates are going one way, if they're going up, property values should go down. That's what the historic data relationship says. And when we started the rate hiking cycle that we're going through now in May of 2022, property prices did initially have a pretty strong decline, a peak to trough of 7.5%. But there was this kind of other factor that came into play, well, a few different factors, but one of which we think was the lifting of travel restrictions to Australia and this really rapid catch up in net overseas migration. And that fundamental demand coincided with a bit of a recovery in home values. So overall, home values are now about 4.5% higher than where they were at the start of rate rises. And that statistical relationship that we've seen historically has fallen apart a little bit. Now, that's not to say that property prices wouldn't be even higher if interest rates were lower, but I think this period is a really good example of how there are other factors that can defy that relationship. I think the other part of it is because in Australia, we've got such a variable mortgage market. So even the perception that the cash rate could be at a peak might have people factoring that into their purchasing decisions, and they're buying at high interest rates with the knowledge that long-term, over their 30-year loan term or whatever, that interest cost will change.
Okay, well, interesting point. What are your thoughts around economy, interest rates? Is there more to come, or what are you sort of seeing the predictions and the next sort of 6 or 12 months around that area?
So there has been a little bit of a scare around a potential rate hike in August.
Yeah.
To be honest,
people were saying there's people out there that are saying we're getting a cut like now, midway through the year. Wouldn't that be great?
I was probably one of them. It's but I guess what it shows is that a lot of the expectations for interest rates, it's very data dependent. So the more and more new information that we get about how the economy is performing, that's going to kind of shift and alter expectations of where the cash rate is going. So one of the things that spooked the market was the monthly inflation indicator, a relatively new measure and frankly an imperfect measure of inflation.
Why is it imperfect?
Because it only captures parts of what we call the CPI basket, which is that basket of goods and services that we're measuring price change in. We only get a limited view of how it works or how it's tracking each month, whereas the quarterly measure, which comes out at the end of July, will give us the full view of how prices are trending. The other reason it's an imperfect measure is just plotting it against the quarterly CPI result over time. It doesn't always move in line with where the quarterly data goes. So a lot of the major banks, no one across the big four have changed their forecasts to a rise.
Yep.
But NAB and ANZ at this stage have just pushed out their forecasts for when the cut will be. So ANZ's looking at February, NAB's looking at May next year, and the other banks, as far as I recall, they've still got their expectations of rate cuts. So yeah, I think if you look at where a lot of the well-respected economists and forecasters are sitting, many of the majors haven't predicted another rise, and we've still got a few other important data reports to come out to tell us about the economy. So there's no certainty of a rate rise in August.
So
what
are we looking for? Because you're saying that a lot of people, everyday Australians are just looking at that monthly CPI indication and freaking out rather than the quarterly? No,
I think a lot of the everyday Australians are probably seeing headlines of still very competent and well-respected economists, but maybe they're getting more of a voice in the media at the moment because they're saying this more shocking thing about a potential rate rise in August. There's a wide array of forecasts out there, but I think it's important to remember that monthly CPI, not a perfect measure, no guarantee of a rate hike, and the RBA would know that. They're waiting for some of the bigger economic data releases to come out this month as well.
Okay, perfect. Well, I think that's something to people to note to keep an eye out for, is the quarterly rather than the monthly. And it makes sense. You shouldn't be making that decision based on just that monthly one that might be jumping around a little bit, whereas the quarterly is that capture of a quarter of the year. So one thing I want to ask you about is the capital city of Perth is very popular lately.
Yes.
Especially with property investors and a lot of people thinking about it, a lot of people that have bought there. And I think what's interesting about Perth is if you ask an investor that bought in Perth 3 years ago, they are going to tell you a different story about Perth than the investor that's owned there 10 years ago. What's your thoughts on Perth? What are you seeing, and why has Perth skyrocketed over the last couple of years?
So there's a few different reasons. Where to start? I guess worth noting, it's seeing extraordinary growth right now. So values across Perth are up almost 24% in the past year. And the range of performance across the capital cities hasn't been this varied for at least a decade. You've got about 24% uplift across Perth versus Hobart, which was down 0.1%. But I think that short-term performance is a bit noisy, and it helps, like you said, to put into perspective the longer-term picture for the Perth market. If you look over the past decade, Perth is actually the second weakest performer of the capital cities in terms of its capital growth. Values up 41% in the past decade, and they're up about 60% in the past 4 years. So much of that growth has come just post-pandemic period. So in a way, I think COVID was the key in the ignition, if you like, of turning things around in the Perth market. We started to see net interstate migration go from negative throughout the 2010s to positive. So you had more people entering the state now than you do leaving. COVID more broadly, and a lot of the monetary and fiscal stimulus that we saw around the world meant that there was a lot more consumption. So that's pushed up commodity demand, which benefits WA as well, creates more jobs. And it was cheap. At the start of the pandemic, a typical dwelling value across the Perth market was sitting at about $450,000 compared to, say, $1 million across Sydney. Now, Perth home values have risen about 60% from the start of the pandemic, and that median dwelling value is sitting close to $750,000. But in terms of the capital city rankings, it's still one of the more affordable. So I think that continues to drive growth. And we're seeing this not just across the capital cities, but within the capital cities. The areas that are driving growth are the cheaper end of town, because borrowing capacity is so constrained. People aren't able to take out as much money when interest rates are this high. So demand is skewing to where they can get in, which is the more affordable markets. You see it in Sydney as well. Outer Southwest, Inner Southwest and Bankstown were the fastest growing markets over the past year.
In Sydney or?
In Sydney, sorry.
Sydney,
And then when you look across the capital cities, it's Perth, Adelaide, Brisbane, which is not so cheap now, but in terms of the value you can get for your money, is still very good. And really, Brisbane, Adelaide and Perth are driving most of the increase across our combined capital city market.
So then what's the forecast? If you're saying that Perth over the last 10 years has averaged 40% in growth, and was it 60% in the last 4 years, you said?
That's correct, yeah.
What happens for the forecast in the next few years? Does that then correct, talk to me, does that then correct to the 10-year growth, that 10-year growth rate, and there is a correction where that price starts to edge off? Or what sort of happens there? Because it can't go, it'd be great if it grew at 60% every 4 years, but obviously that can't happen, right?
Well, you said it, right?
Yeah.
That kind of growth can't be sustained. I think a good comparison might be somewhere like Hobart, right? Which is still, in terms of the past 10 years, the highest capital growth performer. But anyone who's following that market at the moment would know that it's been through quite a corrective period as interest rates have gone up. So it's down about 12% from its high in 2022.
Wow.
Yeah. But it's still up 80% over the past decade.
Okay.
So I think you could expect a similar thing across Perth. It will inevitably move into the downswing phase. No upswing lasts forever. But I think there's a lot of value gain that is going to be held across that market still. Yep. So it'll come down from a peak, but I don't think it's going all the way back down to its pre-COVID levels. And one of the reasons I think that is because it continues to grow even under such a high interest rate environment. You'd have to think once we get to the other end of the rate hiking cycle, that would kind of buoy the Perth market as well. And I think that given some of the fundamentals in jobs growth, population growth, not all of it associated with the resources sector, it's going to hold some of the value gains that it's seen over the past few years.
Even if the investors start to die off because, it's grown in price, the investors go, it's too expensive for me. What then happens to the people that are over there, the people that live there that, were being able to afford a house for 450 are now presented with a house at 750 a couple of years later? What then? Are you saying that means there'll be sort of less demand for those prices, the affordability is unrealistic? Like, what happens then?
Well, you get a bit of spillover into other areas. So we've seen that kind of Bunbury, Augusta, these other major regional centres outside of Perth grow in popularity because people seek the next most affordable market that they can get into. Investors are certainly favouring WA more than they have historically, but it's not like they make up the whole market. The biggest component of the Perth market is still owner-occupier purchases. And I think if you get investors withdrawing from that market a bit, then you probably get owner-occupiers who are going to fill up that demand where in the absence of the investor. They might not pay as much as an investor and prices might adjust, but prices only fall to a point that people are willing to start paying for them again. And again, if you go to Hobart, you're kind of seeing that at the moment. There was a short, sharp decline, and now it's just kind of flatlining. The other thing to remember too is with the Australian property market, we have pretty conservative lending. We have very prudent lending, both from high interest rates and also the 3 percentage point serviceability buffer. Yep. That helps to protect us during downturns as well. It means that you don't get a mass sell-off because all of these people all of a sudden can't afford their mortgages. They were tested to service their mortgage under
2.5% with the 3% buffer.
Yeah.
Yeah, we're at that now though.
Yeah.
Okay. And what are your thoughts on? Okay, so that's sort of Perth. What about Queensland and Brizzy market? What do you think's happening there? Where are you seeing that in terms of the data points that you guys are looking at?
So Queensland in general just had a massive demand shock through the pandemic, both from the fact that you've got record levels of overseas migration, but the interstate migration, so people leaving New South Wales and Victoria and going to the Sunshine State, took off massively through the pandemic. 5 years prior to COVID, the annual number of people added to the population through that movement was about 20,000 people a year, shot up to about 50,000 people a year in year to March 2022. Now it's stabilised to about 35,000. Wow. So you've got a much higher average level of people moving to the state than what you were seeing pre-pandemic. And that kind of shock to demand is just something that I think developers, realos, councils, no one was anticipating that kind of demand shock. And so they've got to play catch up to get that new supply into the market. And as long as they do, prices are still going to be rising. There's been a bit of a, the other dynamic is the gap between Brisbane and Sydney prices and Brisbane and Melbourne prices. So Brisbane, on the whole, median house and unit values have overtaken Melbourne. So that might slow the movement of people from Melbourne to Brisbane, for example.
It's more expensive.
Exactly.
Okay.
But Sydney median house value is still, it's 1.5 million now, compared to about 950,000 across Brisbane. And the value, again, that you get across that Brisbane market is something that is still probably attractive to migrants from the southern states. So, in the short term at least, I don't see a big reversal in the southeast Queensland market. It's going to be buoyed by the Olympics. It's obviously like a great lifestyle market. So I think, again, while you're not going to get year after year of double-digit growth, I think there's going to be some substantial value gains that are held across that market as well.
What are your thoughts about the Olympics and the impact on housing prices? Because I kind of see it as almost as if people buy there because they're saying, the Olympics is going to be there. Because the Olympics there'll be growth.
So it's like a self-fulfilling prophecy.
Correct. And I'm like, everyone's buying it because it's not the actual Olympics, it's because everyone's buying it because of the Olympics. Like, or what do you see? Is the Olympics going to be an actual big driver for property growth there, or what do you think? Or is it just the chat around it, the news, the media, and people being like, I need to get in there for it, and it pushes everyone into that market?
Oh, there may be an element of that, but at the end of the day, it is actual tangible infrastructure that's being added to Brisbane to accommodate the games. There was some research done on this around Sydney, how that infrastructure then goes on to be utilised for things like, big entertainment acts to come in and play out at Homebush, and that infrastructure adds value, it adds jobs, it adds capacity for more economic activity down the line. Having said that, it is hard to analyze the direct impact that it has on property values because there's so much else that goes on around that. Like Sydney home values did rise after the Olympics, but that had also come off the back of a downturn. So prices were probably going to go up anyway. So I do think it adds actual value through more economic activity.
Okay, but because a lot of that stuff, though, a lot of that infrastructure is major sporting, like once it's Brisbane's got some pretty good infrastructure already, but I think once a lot of that's already done, whatever they're building now, I mean, once it's done, stadiums, all those centres, a lot of them don't have huge personnel for operating costs, so it's like almost feel like there's some relativity between, if it's like a road infrastructure project, it takes a really big team to build it and get it done. But after the operational jobs created, it's very different to, say, a hospital where you need thousands of people in around and working in that. So you still think that there's going to be, there is still some pull with the sporting infrastructure that it'll bring in? Yeah,
definitely. I think it has net benefit for the city and housing values long term.
Okay, great. Well, perfect. There it is. You heard it here first. And what about we'll go Hobart too. So 4 more markets. But Sydney, what are your thoughts on Sydney? What are the data points, and what are you seeing happening here?
So Sydney is still rising in value, and it's a city where you're still technically seeing more sales than new listings added to the market as a whole. But it's a very split story at the moment between the southwest, which is growing very, very strongly, traditionally more affordable markets, again attracting more of the demand amid high interest rates, versus the northeast, where there are a lot more markets in decline because they're at a price point that are just not accessible for a lot of buyers. So last year, Sydney home values were up 11.5%. The way that the growth rate is going now, it's a lot softer. So if it continues this way through 2024, we could be looking at 5% for this calendar year. And if you have further negative shocks to demand, which we will because the economy is slowing, unemployment's rising, that growth rate could come out softer.
Okay, even with your record levels of immigration and all these people that are coming in, is that because they're coming and going elsewhere? Or, I mean, the issue that I see at the moment, especially with Sydney, these immigration figures coming over, hundreds of thousands of people, us being really slow to be building and approving and building more of that stock. So my thing is, you've got these people piling in, you've got nowhere to go, you've got limited resources. Do you think it's still going to fall? Like, that's not going to be beneficial for the growth? Or
well, it kind of comes back to what we were talking about Melbourne before. So Melbourne actually is historically the biggest recipient of net overseas migration.
Really?
Yes. And between Sydney and Melbourne, historically they've accounted for about 60% of net overseas migration to Australia, those two cities. Doesn't mean that purchasing demand is high. In fact, 60 to 70% of migrants when they first come to Australia are renters, not purchasers. So indirectly that can prop up the market, but it doesn't really have an immediate effect. And it's more like when permanent migrants have been in the country for 10 years or more, that's when their tenure in terms of ownership starts to look more like someone born in Australia. So it could be a very long time, especially with affordability constraints, before a lot of that net overseas migration translate to people buying property.
Not what the rental market, though, it'll still have a substantial effect. I take it right?
Yeah. So rent values across Sydney are up about 8% in the past year. We're up about 8.5% across Melbourne, 14% across Perth. It's really the smaller capital cities, so Canberra, ACT, Darwin, where rental growth is a lot softer and they don't get as much of the net overseas migration.
So is that why? That's why it's a little bit softer. And what's your thoughts on the Melbourne market? Because it is one thing that I see in almost every forum on the Melbourne market and in investors forum is people are avoiding it like the plague because of a couple of government policies and particularly like land tax and stuff like that. So what are your thoughts on Melbourne and how is that correlation between like something like a government policy, investor activity or people buying in there and property prices?
Yeah, I've heard that too. A lot of investors are kind of spooked by a couple of levies that were introduced or announced from the 23-24 budget. In reality, though, the share of investment finance going to Melbourne has been coming down since the start of the pandemic. So I think that's kind of lumped in with, this general unease about the market because of the negative demand shocks that it's had from people leaving the state through lockdowns and maybe, the extended lockdowns across Melbourne as well. Yeah. So it's one of those things where it's kind of hard to separate out the exact impact of those additional investment levies. Mm-hmm. But what's interesting about Melbourne is you could almost argue that they're doing it right from an affordability perspective because values are falling, which is what first home buyers want. Mm-hmm. And if we look at the amount of first home buyer finance going out across the country, Victoria attracts the highest share. So it's not good from an investment perspective and it poses a real challenge from a rental perspective because obviously we need investment property to add to rental supply, but there is some silver lining there for owner-occupier purchasers and even anecdotally, talking to people who are now looking at Melbourne again because it's cheap, because it's a relative bargain, and in the long term, you've got to think it's one of the best cities in the world. And right now, it's kind of on sale, if you like. So I think the other challenge with Melbourne is that there's probably a bit more mortgage stress, right? There's areas on the outer periphery of the metropolitan where we're actually seeing a build-up in listings and people wanting to sell their property, even though market conditions aren't great. So that could be one of the reasons that prices are coming down as well. And that's not a government engineered policy. That's an unhappy accident that forced sales would be putting downward pressure on prices as well.
So potentially a good little opportunity to nab a bargain.
I think Melbourne presents an excellent opportunity.
There's a little one for everyone at home. If they've listened to this long, that's the reward. And then talk to me. Two more. I probably see most data. Like I'm most intrigued in is Adelaide market. Mm-hmm. What are your thoughts, feelings, emotions?
Adelaide has historically been a slow, steady performer in Australia's housing market, going up by a couple of % each year, and then boom, through the pandemic, right? It's kind of like what we saw in Perth. Right? One of, yeah. So technically Perth is the best performer, and then Adelaide and Brisbane come closely after that. So again, values up around 60% since the start of the pandemic, and this makes it the one of the best market performers over the past decade. Because unlike Perth, it wasn't preceded by a big downturn. It was just preceded by this slow, steady growth. So from a decade growth perspective, it's up about 80% as well. I think it's a lovely city. The internal migration trend is starting to turn now. You're not getting as much of a boost from internal population growth. And relative to Perth and Brisbane, it's started to slow down a bit in terms of the quarterly growth rate. So still high, sitting at 5% growth in the June quarter. but just easing off that little bit. So
5% growth in the June quarter.
Mm-hmm.
In one quarter? 5%
Yeah.
growth? Okay.
Yeah. Well, Perth is up 6.5%.
Oh my
Yeah.
Lord. Oh
Yeah.
my Lord.
Yeah.
Okay.
So, but eventually you're going to get an affordability constraint set in across that market. And like with, even with a city like Sydney, where it's a softer performer, we expect it to slow. I think like Adelaide as well, that'll eventually come into a downturn. But yeah, I think fundamentals look pretty good, and it's, again, could be like a Hobart story where you get a bit of a drop off in value, but it lands much higher than where it was pre-pandemic.
And so that would be my next question is what you're seeing in the data for the Hobart market is just ahead of probably what's going to happen to Perth, is that it has had its run and now it's sort of correcting?
Yeah, Perth, it's hard to say that it's had its run.
Oh,
because,
I mean, yeah, of course.
Yeah, the rate of growth has really not shown sign of a slowdown. But eventually you would have to expect that the markets are going to react to prices just getting too high for people to purchase, and the slowing down of our economy with unemployment rising. That's going to affect people's appetite to purchase property as well. So you've got another demand side factor. And the other thing too is that even though supply in terms of new construction has been really constrained because of all of the increase in construction costs and shortage of labour, what that means is you've got this swelling of the pipeline of properties that are under construction. Those are eventually going to come to market as well. We've got about 250,000 dwellings that are approved but not yet complete.
In all of Australia?
In all of Australia. Yep. But that's a relatively high number for our construction pipeline. So eventually, as capacity constraints ease in the construction sector, we get more completions. People who have been waiting for their new homes move out of the rental market into these properties. There is a big pipeline of supply that's sitting there. It's just not done yet.
Yeah, it's interesting because people... What are your thoughts on the two metrics? People talk a lot about building approvals, but commencements is obviously, the two would vary greatly, because there's a lot of people, and me being in this side of the industry as well, there's a lot of people getting projects approved.
Yep.
And people look at that and be like, oh, it's got huge building approvals, but commencements is not tracking the same as approvals, right?
Yeah, I mean, to be honest, both approvals and commencements have slowed because of the environment that we're in. But even if you look at under construction, there's a lot of homes that are under construction as well, and that pipeline is sitting relatively high. I think it's just the feasibility of getting those projects finished. And of course, with a relatively high level of insolvencies in the building sector, it's been hard to deliver those as well. But I guess the point is that on the supply side, we're kind of in a chokehold right now, but eventually that's going to ease up as well, and that's going to be contributing to the downswing phase of the cycle for some of these smaller capital cities that have performed really well.
Yeah, okay. And what do you think? A lot of people talk about us being in this housing crisis. What do you foresee in your research and your day-to-day work as not a solution, but a way to, I suppose, fix this housing crisis that Australia is in? Is it those getting those projects built that are taking really slow, or what's the solution, Eliza?
I think productive capacity in the construction sector is got to be a big short-term focus. Getting more labourers in, getting more innovation in, helping to finance the completion of some of these projects, and maybe looking at more innovative ways to do that as well, is going to help expedite some of the big construction pipeline that is yet to be completed. That's got to be the short-term focus. Long-term, I think we've got to boost the social and affordable housing stream, which the government is looking at doing. Like, they're trying to build an additional 30,000 social and affordable homes over the next 5 years. Unfortunately, that doesn't really make a dent in the number of people that are actually waiting for social and affordable, especially over a 5-year period. So I think continuing to put more emphasis on that, because that helps to stabilize the supply of property even when you get fluctuations in the private sector related to interest rates and labor and whatever. Mm-hmm. You've got to look at demand. If we can't supply property as quickly as we have historically, then we need to look at the existing stock that we already have and make sure that it's being utilized effectively, making sure that properties aren't sitting vacant, making sure that people are in the right size property. At the moment in Australia, there is a higher share of 2-person family households in a 4-bedroom home than there are 4-person family households in a 4-bedroom home. Think empty nesters, or maybe a young couple who hasn't had kids yet, right? But that is really inefficient. And so it's like, how can we design tax? How can we build more right-sized property for people to encourage better utilization? So that's just one example of how you could look at the demand side for property as well. I think those are probably the most important priorities right now. But I mean, if COVID has taught us anything, it's that the environment that our property market operates in is subject to so much change and some of it can be so unexpected. So I'm sure those priorities might change over time as well.
Yeah, okay. We'll see how we go. And what do you think, if there's anything, you guys are looking at a lot of data points every day, every week. There's teams, there's like, you guys have your fingers in all the data points. For the Australian property market, is there anything in particular you're seeing has the biggest correlation to property growth? Is it the population growth in the area? Is it the affordability? You know, is there anything that you're seeing is a key indicator, or at least a lead indicator to property growth?
That's a great question. And I think one of the more unexpected metrics that, again, became prevalent through the pandemic was, again, this idea of utilizing housing and average household size. Yeah. So you may be aware, but if your listeners aren't, one of the interesting housing demand trends through COVID was that average household size reduced. Nationally, we went from an average of like 2.6 people per household to 2.5 people per household, which doesn't sound like a big change. But the RBA estimates that shift in average person per household increased property demand by 120,000 dwellings. Wow. So the idea was like you had, for example, rental share households breaking up and spreading out across the market. And even with no population growth in 2021, it substantially increased values, it increased rents, because people were just demanding more space. So for us, one of the things that we're looking at is, well, what happens if average household size goes back up? That's another demand factor, that people are contracting back and living together again. And that's going to reduce household demand fundamentally, no matter what happens with immigration or interest rates. And that kind of has to happen, right? If rents keep going up, people share again to try and alleviate housing costs. So that's one of the things that we're, I guess, interested in. We don't necessarily have the data on it, but we're following it from
household sizes.
So interesting, right?
Yeah, I would like a 0.1 of a.
Yeah, I know. Tiny change, and the property market was like boom.
Oh,
so
okay,
it's huge.
Interesting, great little one to end on. But what I usually ask people at the end of each interview is 2 things. One is, what is a golden nugget? So what's one piece of information, high significant value that you haven't shared, or that you can share exclusively with the Everything Property audience? Do you have anything for me?
I feel like I may have given it away with our household size tidbit.
Yep.
What else? Oh, we've done a little bit of new research that we haven't really put out yet to market.
Exclusive,
which is looking at the composition of change in capital city markets.
Okay.
So it comes back to this idea that not only are Adelaide, Perth and Brisbane leading capital growth, but they're actually driving capital growth. So that data shows that in June, those 3 cities accounted for 70% of the increase in capital city values.
Wow.
So maybe not one for investors,
Yeah.
but for your data nerds,
Yeah, I'm
hopefully
sure there's
that's an
plenty of-
interesting piece of information for them.
I think that in the household size is two little
Yeah, great.
things I've picked up too. I'll tuck them away. And lastly, to end on, Eliza, Owen, what is a quote you live your life by?
I really like that, Conan O'Brien's quote from his last episode on The Tonight Show, when he said, if you work really hard and you're kind, amazing things will happen. And I think that's just a nice, simple set of principles that I've kind of tried to take with me through my career. And I think it's, for me anyway, it's something that has given me a brilliant career.
Perfect. Well, there you have it, folks. Eliza, Owen, I appreciate you coming on the Everything Property podcast and giving us this absolute masterclass in Australian data.
Thank you for having me.
No problem.